Well, let me start with a simple question. When you hear that India had a good year economically in 2025, what does that actually mean for growth, prices, and jobs? Because big words get thrown around all the time, but the real story lies in the numbers. So let's walk through it calmly, step by step. First, growth. Despite global uncertainty, India's economy did not slow down in 2025. In fact, it surprised on the upside. In the second quarter of the current financial year, India's GDP grew by 8.2%. Well, that's not a soft number, that is a strong, broad based growth. And it wasn't driven off by one of the factors. It was backed by steady consumer demand, government spending on infrastructure, and relatively stable energy prices. Now, when growth holds up like that, the next thing to watch is what the central bank thinks. Well, the Reserve Bank of India looked at the data and revised its full year growth forecast for FY26 upwards to 7.3%. Well, that tells you something important, that policymakers were not worried about a sudden slowdown. They saw momentum continuing, but growth alone is not enough. The real question is what was happening to prices, because high growth with high inflation is not sustainable. Well, this is where 2025 really stood out. At the start of the year, consumer inflation was running at 4.26% in January. Over the next few months, inflation kept cooling. By October, headline inflation dropped to 0.25%, an exceptionally low level by Indian standards. Even when it's edged up to slightly to 0.71% in November, inflation remained firmly under control. Now pause here for a second. Low inflation changes everything. It gives households relief, it improves purchasing power, and most importantly, it gives the RBI room to support growth. That's exactly what happened. With inflation under the control, the Reserve Bank of India cut the repo rate by 25 basis points, bringing it down to 5.25%. At the same time, it stayed neutral on future moves, keeping flexibility intact. Well, this balance helped keep borrowing costs reasonable without overheating the economy. Now, moving on to a quick look at the external sector, because this is where global stress usually shows up first. As of November 28, 2025, India's foreign exchange reserves stood at $686.2 billion, providing an import cover of about 11 months, which is a strong external buffer. Well, the current account position also improved. India's current account deficit narrowed from 2.2% of the GDP in the second quarter of FY25 to 1.3% in the second quarter of FY26, supported by strong services, exports, and rising remittances inwards. Well, inward remittances grew 10.7% year on year during the quarter, helping keeping the fiscal deficit in modest. Foreign direct investment also picked up pace. Between April and September, FY26 gross FDI rose 19.4% to $51.8 billion, while net FDI surged 127.6% to $7.7 billion, largely due to lower repatriation despite higher outward investment. Now, let's talk about jobs, because growth and inflation mean very little if employment doesn't improve. Here, the data showed steady progress. By November 2025, the unemployment rate fell to 4.8%, which was the lowest level seen since April. More importantly, more people were participating in the labor market. Labor force participation rose to 55.8% and the worker population ratio improved to 53.2%. Well, what does that tell you? It suggests that not only jobs were being created, but more people felt confident enough to enter the workforce, and many of them found work. Next, let's look at India's borders. Exports often face pressure when global demand weakens, but India's external sector held up pretty well. Merchandise exports rose from $36.4 billion in January to over $38 billion by November. Gains came from engineering goods, electronics, marine products, and other key sectors. Services exports continued to be India's big strength. Between April and November, services exports grew by nearly 9%. This helped keep foreign exchange reserves comfortable and ensured the current account deficit stayed manageable. And finally, there is the global vote of confidence. Well, that's right. International institutions continue to see India as one of the fastest growing major economies. The IMF projected growth of around 6.6%. The OECD estimated close to 6.7%, and the World Bank placed India at about 6.5%. At a time when many economies were struggling to grow even half as fast, these numbers actually stood out. So when you put everything together, strong growth, sharply lower inflation, improving job indicators, resilient exports, and sustained global confidence, 2025 emerges as a year where the macro picture stayed firmly in India's favor. And that is what sets the tone as India heads into 2026.